The markets are selling off today. You don't need to look any further than the rise in oil prices along with the rise in U.S. yields for an explanation why. Now, U.S. yields are higher. We have the Federal Reserve minutes today, and there's a very good chance the Fed minutes is going to show less dovishness, justifying the market's belief that the Federal Reserve is going to raise interest rates not once, but possibly even twice this year. But of course, that's not the real story. The real story is oil. Oil prices are up 4%, above $70 a barrel. And that's because President Trump has basically said that the ceasefire between the U.S. and Iran is over. Now, this was certainly building up because, over the past couple of days, we saw Iran shoot missiles onto tankers in the Strait of Hormuz. U.S. shot missiles onto Iran. All of that pointed to escalation, not de-escalation in the Middle East. So Trump obviously was dissatisfied, and that the fact that we're still back in Middle East turmoil is driving stocks lower, oil prices higher. But it wasn't just that. Trump has now blamed his trade partners for not helping and threatening retaliation. He basically pointed out Spain and said that, he's threatened to cut off trade with Spain due to their lack of military support. And that, I think, could have, effects, kind of residual effects, not only for the euro, but also for European markets, U.S. markets, trade activity, tariff possibilities going forward. And that's something I'm very worried about, because not only did he single out Spain, but he also said he was dissatisfied with Italy and the UK. So I've warned you before that one of the greatest risks in July is the return, or second half of the year, is the return of tariff threats. And we could be starting to begin to see that, which of course is negative for equities. Now, there was a lot of two-way action in the markets because after we had those headlines, Trump, he said that he still wants to keep the U.S. and NATO, and the fact that he didn't reiterate these comments, traders and investors perceived as positive, took stocks off their lows. But I think that does not take away from the bigger picture, which is the Middle East conflict is escalating and trade tensions are escalating, both of which are dangerous for the markets. Gold prices, it's down because of risk off flows. The US dollar is up across the board. I'm particularly bearish euros because of all this. And, that's pretty much the outlook for the major currencies. The yen continues to fall. And, I think the pressure, upside pressure in the dollar, as well as some of the weaker data from Japan, and the market just basically testing the resolve of the Japanese to see whether they'll come in again, are all the reasons why dollar yen refuses to fall. I'm Kathy LIEN with BK Traders, Prop Trader Edge. Make sure you check out both websites. I'll see you next time.